Hello, hello, my friend. Hey, Amber Coleman. What
Hey,
are you
we're
doing?
live. Good. What are you up to?
Just trying to share the good news about buying houses in Las Vegas, make people
Yeah.
realize how awesome our city is. All the normal things that we do together to keep
Yeah,
people
it's
feeling
fun
comfortable.
stuff. We love it.
I do. I know. I love it. I'm super excited about today's live stream though, because you and I have done a really good job. I'm going to pat us on the back. A really good job over the
We
last
should.
year. Honestly, the last 3 years, but the last year specifically, with really opening people's eyes to different types of loan programs that they might not have known they could have taken advantage of. The other thing I think that
Mhm.
we've done is really give people hope by showing them it's not just black and white in the world of loans these days. There's a lot of creative thinking happening. A lot of people like you. There's not a lot of people like you, but there are people like you who are helping our buyers really think creatively and put game plans together that lets them take advantage of more than just putting a down payment and buying a house, right? So I'm just really,
Yeah.
really excited. I think we've done a good job of that today. So I thought today, why don't we go back a little bit and round up some of the loans that people might not have seen in past videos and do a little bit of a loan roundup and kind of revisit some of the ones that I think were the biggest hits and the most popular. So we can kind of revisit them and talk and then, of course, answer people's questions. What are your thoughts?
I love it. I love it. And you know what? I just want to say my most favorite thing when people call is you guys actually gave me hope. Like I never thought I could buy. Doesn't that it just put tingles up me
It
every time somebody
definitely
calls.
it reaffirms our entire mission that we talk about all the
Mhm.
time. So I'm just so grateful for that. I'm so grateful for the opportunity to work with someone, like you who doesn't take no for an answer, but also who really is on a mission to bring hope and not a mission to take advantage of people or just shove people into homes. We're really
Well,
here to
back
kind of
that's a girly.
this. Thank you. Okay, cool. So while we're giving each other all this love, I'm watching more people join. Welcome, welcome to anybody who's coming online. We are going to be talking about some of the coolest loans that we've revisited over the last, or that we visited over the last year or two, that people just don't think about. A lot of lenders do not get creative. They don't take the time to do it. We're going to do it for you. So before we jump into that, Amber, let's do a little bit of a walkthrough of what's going on with the market. And to anybody watching, you're always invited to comment. Just drop it like it's hot below in the comment box. We are here for you. We want to answer your questions. We want to make sure that we take the time while we're live to do it live. But if we aren't able to get you the answer, of course, we can certainly reach out or do another video about it. But we're here for you. So drop any and all questions you have about living in Vegas, loans, buying houses. I don't know how we're so awesomely, devastatingly gorgeous. I don't know. One of those things. And
You
then
can
we'll
you can drop those all day long.
you can have that all day. We're going to talk about that. But let's talk a little bit about what you're feeling about the market right now, Amber. How's it been over the last couple of weeks?
So the last couple of, when I'm talking about interest rates, last week went crazy.
Yeah.
And I always feel like the weeks that it goes crazy, you're always going to see the next week get a little bit better. It's almost like it's done on purpose, but I can't prove that.
Interesting how
So
that goes.
I know it is quite interesting how it goes. So, but the good thing is today, as we talked to you, the inflation numbers came out today and they
Yeah.
were better than expected. So,
Okay.
yay!
Yay.
Listen, yeah, this inflation world that we're in right now, like that's what's been causing everything. The Fed's doing this because of inflation, everything that's happening. So
Yeah.
the inflation world that we're in right now is starting to get better. Yes.
Okay. Which is
So
just helps us take a breath someday soon, we hope. Yeah.
yeah, well, that just helps it. Like today, the market calmed down. So rates definitely calmed down today. They're, like compared to where they were last week, they kind of
Yeah.
went back to the week before that. But it hopefully is going to cause a trend when we'll start seeing things move down a little bit more.
I love it. So from the loan world, it sounds like things have been pretty nutty and pretty volatile, bit like all over the map.
Yes,
That
yes, but
face was making,
today
yeah.
today is a good day. It's a bright and shiny day in Laci's world,
I
right?
love it. I love it. From a
So,
perspective of like just the real estate side. So you're in the loan side. I'm on the side where we help you find the home. We help you dream about the home. We help you, really track down the one that's going to work for you. I'm going to show a couple of screens here because I've heard a lot of the same commentary from people. I've been talking to a lot of people lately. I'm getting a lot of the same comments, which is fine. We're happy to hear that everybody's watching the news, that they're watching, they're listening, they're calling. A lot of people are calling because they said, "Hey, you told me to call, so I'm calling." Right. So all those things are great. But one of the things that I've heard on repeat has been, should I buy now or should I wait? Like, what's the benefit in buying now versus waiting? I just can't figure it out. So let me show you the benefit of buying now, even though interest rates are higher than they were a couple of years ago. Look at my eyes as I roll back. Higher. I'm so using air quotes because these aren't high interest rates. Okay. The benefit. So let me show you what's going on here. So right now, as of last month, which is June, the median home price is 440,000, basically 441,000. That's for units that are sold. Now, units that are new listings, that's new homes that went on the market during that month, the median home price was 475. We have availability of about 1.6 months worth of inventory. And now if I look at condos, 275 is a median price for new ones that are listed, 285, and we have about 1.4 months. The thing that you have to know about this market and what's going on right now is that we're not getting any better when it comes to available homes to buy. So what I've seen a few people say to me is, well, I looked at last month's median home price, which I'm going to switch to now, and it was 442.
Dang.
20. Now it's 440,990, right? So this is May and this is June. So there's what, a difference of $1,500, $2,000 ish, right?
And that's across the whole city too.
The whole city for single family homes. The difference though is this is June, this is May. Now let's look at April, 1 month prior. So it's 2 months prior to what we're going off of today. 430. So between now and April, there's been about I'm going to say $7,000 difference. I'm rounding numbers, of course, in the median home price of sold homes. The effective availability is 1.9 months, which is almost 2 months worth of availability in terms of homes that you can actually purchase, homes that are for sale. Not much has changed in that price point, not effectively that's going to change the bottom line for you. But what has changed is that availability month to month, it has gone down.
Oh, that makes my stomach hurt.
Yeah. So the cost of waiting to buy comes when it comes to available homes to choose from. And here's what I'm going to promise you. Right now, while rates are a little higher, and I'm using air quotes again, that this is all that's being said before we talk about, can we negotiate somebody to buy your rate down? Can we get you something from a builder? Can we negotiate money off the cost of the house, right? This is before negotiations. There's a little bit of a difference in the median home price, but the value, I want to revisit this, the values of the new listings of homes, the comps we're using, the appraisals that we're using to price the homes as we list them has stayed the exact same, but the availability has gotten less. So the availability has gone down quite a bit. The price point of actual negotiated prices sold has gone down a little bit, but the median listing price has stayed the exact same. Let me show you again. Here's June. Here's May. That's that middle column right there. And here's April. $1,000
right there.
And it's gone up, not down. Let me just make that clear. So what that tells me, guys, is that this is June again. While we're seeing the shift of available homes go down, the prices are staying pretty damn steady. Yes, we're getting a little more negotiability. Yes, we're definitely seeing, it come down a little, 7,000, if that $7,000 over the last 3 months. But what hasn't changed is the listing price. If the market was crashing and you should be waiting, that median home listing price would be dropping down like a sinking ship. And it's just not. It's really staying steady. So what I tell people, why would you wait for the interest rates to come back down? And for everyone and their mom to go, hallelujah, interest rates are down. I can afford to buy more of a home. I'm now going to go shopping. When you're only going to have 1.6 months worth of available homes to choose from, now you're competing against 1,000 other buyers, and you're going to find yourself paying that median price for those new listings or higher because of the fact that people aren't going to need to negotiate with you. Those sellers don't need to negotiate when they have 30 offers sitting in their inbox, right? So while effective availability is still low, which it is going to be, and it's going to get lower, and the median home price isn't really dropping a ton, watching that median listing price tells me we're not going to see a crazy big difference in what you're going to get if the interest rates falls, which is when you're going to want to buy. You're going to be paying that listing price. You're not going to be paying that median price that we've been seeing. So waiting to buy is going to cost you more in the long run. It's much easier to refinance a home. Much easier to refinance a home after you've gotten into a home and you're doing your thing once rates fall than it is to compete for a home and think you're going to save money. So that's kind of been the one question, the one thing that I've been kind of having a hard time getting people to understand. I don't know that I did a good job now, but basically the less homes we have, and as we're shrinking our inventory, the minute those rates drop, those prices are going to jump right back up to that median listing price. And that's the point where you're not saving any money and you're going to regret waiting to buy. That's the bottom line.
I think you explained it very well. I like how you showed the graphs and everything on there.
Thanks. The other thing I wanted to show you guys real quick before we jump into these loans is I want to actually show you my screen where I can look up exactly how many listings there are right now in Las Vegas for single family homes. How does that sound?
Let's go into it. That's exciting.
See if I can figure out how to do this.
Let's go shopping.
Let's go shopping. Here's why I want to do this. A lot of people tell me, I want to in Henderson and Summerlin only. I want to make sure I have a pool. I want to, there's always I want to. And there's not a whole lot of people understanding that the homes that are staying on the market It's not working. I'll get it to work in a second. The homes that are sitting and staying on the market are the ones that are not as desirable. They're not the pool houses. They're not the ones that have been renovated and updated. The homes that are sticking on the market, that 1.6, 1.4, that 1.6, 1.4 months worth of inventory that's available each month is really kind of the homes that are sticky and staying. The new homes that are hitting the market are replacing themselves immediately, but we're only replacing them at 50% rate of what we're selling them at. So again, all the more reason that we have 5,000 homes. I don't know why it's not showing you right now. I'm trying to show you, but it's not showing you. I'll try
it's
again.
not popping up.
It's not popping up, but I'll work on it in a minute. We have 5,120 homes available today. On that graph that I just showed you guys a minute ago, as of last month, we had 2,617 new listings. That's half of the amount-ish, right, of what we have available today, which means the new ones that are getting listed are going away and getting replaced with a nicer new one. But we're only replacing them at half rate because there's still that the other half of what's available is the undesirables or the stuff that's just not in an area that you want to live in, or needs to have repairs done, or whatever, right? Doesn't have a pool, doesn't look updated. It's going to take a lot of work, blah, 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 blah. So I think my main message to you guys is waiting is going to cost you more in the long run. I will stand by that forever and ever. Amen.
Mm-hmm.
While you're talking about those loans, I'm going to see if I can pull up the screen. I don't know why it wouldn't share with me a minute ago, but the bottom line is waiting, I think, is going to end up costing people a lot more. It's super frustrating too, looking at like resale and then new homes, because there's new homes available too, but a lot of them are doing some weird wonky things with the loans. They're baking in these weird free things that you think you're getting for free, but you're not. They're buying down rates, but they're not. It's a lot of real kludgy stuff that I'm not really sure that I really dial in with. So it's in the strangest market I've ever seen. What do you think, Amber? I'll shut up now.
No, it looks like sometimes they're buying down the rate, but they're adding to the price. So you're paying a higher price for the house, but you're getting a lower rate for it. So yeah, there's some wonky things going on right now. So I'm glad you mentioned
the word
that.
of the day. All right, Amber, while we can, let's shift over and talk about some of these loans that we've been talking about over the last year or two. I'm going to pull up the screen just because I think it'll be interesting to show people the concentration of those price points. But let's talk about some loans. Can we start with my favorite loan that's happening right now? Can we start with the 1% down program?
It's such a good loan program. I love talking about it. It's so fun.
Change the game. Talk to us about this 1% down payment advantage.
The 1% is an amazing loan program. It's so fun to talk about. And I get excited every time I get a pre-qual one of you guys to put you in it. So the 1% program, what it is it's on a conventional loan. So it's on the conventional loan that requires 3% down payment, but Guild is giving a grant for 2% to bring it down to where you're only coming in with 1%. This isn't a repayable grant. It's a grant that you're given because you're under a certain income threshold.
So did you grant free money? I just want to think we should just layman's terms.
It really is. It's the freest money you're going to get because most grants raise the rate up to give the money for the grant. This one doesn't raise the rate up, and you're actually getting the money as long as you fit within the requirements of the loan, like income, which most grants you have to fit within income limit anyway. Like
right.
So that's number one coolness on this, right? And then the second part about this that makes it extremely exciting to talk about is Guild pays for a temporary buy down. So like, let's say, and remember, when I'm just throwing rates, I'm just throwing rates. I'm not saying this is the rate today. I'm just saying, like, if you get, like, say, a 7% interest rate on the loan, Guild pays for the first year to be at 6%. Wow. Which is huge savings for you to be able to do that. So they're like layering on benefits to be able to do this loan. And then on top of that, like how you just mentioned, Laci, that like when it's way easier to refinance than to try to fight offers and stuff like that in certain markets. Yep. So on top of that, Guild's also putting on a payment protection on there, which means that when it's time to refinance, we waive all lender fees on that refinance.
Wow.
And we're going to keep this loan because remember, Guild doesn't really sell loans. We keep our loans. So like there's no, well, it's sold, so I can't do this now. We keep all these loans.
So that's one thing I don't think we talk about enough, Amber. And I think that's one of my favorite things about working so closely with you and with Guild is that, you know, as a homeowner myself, you know, I've bought and sold a few homes in my life and for my own personal use. And one of the most frustrating things and the most confusing things, and honestly, one of the most dangerous things, because if you're not paying attention, it can mess up your credit, is that every now and then more often than not, the mortgage companies or the lender, whoever it might be, will sell your loan the minute you close. So they close you, everything's great. You think, great, I love Guild Mortgage. I'm making Guild Mortgage be the bad guy here in this scenario, but I love Guild Mortgage. It's great. Guild Mortgage decided to sell it off. And now all of a sudden, I don't know who I'm supposed to make my payment to. And who's this new company? And do they have customer service? Do I trust them? And then, there's been many instances where with myself as well as family members in the past where it's kind of messed them up because a couple of people didn't get the notice, didn't get the email, didn't know where to send their payment. The payment got lost in the mail, went to the wrong company, and then boom, they have a ding on their credit, right? So it's been really, really unfortunate. And I love that Guild Mortgage backs their own loans, holds on to their own loans, services their own loans. And the customer service at Guild is bar none one of the best I've ever experienced. So that's amazing.
Well, thank you, Miss Laci. Yeah, you don't feel very loved when your loan gets sold right away, right?
It feels like it was just transactional. It's just like, oh, I feel so dirty. You know what I mean? But this 1% program, let me just hit on this again, because this 1% program, I have never seen a loan this amazing. And I've never seen one that just literally felt like it dropped out of the sky from heaven to give us something, because it was so hard for a while there to get people approved on conventional, to get people approved with all the interest rates going up and weird and being wonky. So this has been really, really a godsend, I think, to the community of buyers who are out there. And I think that the little cherry that you guys put on top of it of, we're going to protect you by helping you refinance it for free. Like, are you kidding me? That takes all the guesswork out of it. Oh, great. As soon as I buy the loan, I'm going to have to refinance it. That's more money out of pocket. Not with Guild and not with this lender, or not with this loan.
Yeah. And one other cool thing that I just thought about while you were saying that, Laci, is sometimes when you're putting in offers on a house, when there's multiple offers on houses, for some reason, and I don't know why, because FHA loans aren't hard loans to get done, but there's a lot of, maybe the listing agents look at FHA as not being as strong, right? So if you were to come in with a conventional loan approval, even though you're doing a grant on it, it's going to show stronger. They don't even know you're doing the grant on it. Then it would be an FHA loan. So, for competition purposes, this is going to beat FHA when a listing agent's looking at it and you're competing.
You can definitely compete more with this one. I love this loan so much. Can you give me any examples of the types of people, or I know there's income limits and things like that, a type of buyer that you've been able to get into this program, maybe what they did for a living or anything like that?
Yeah. Well, so one buyer that I was able to do this loan for, they were straight out of college. There was only one person in the household that was going to be, remember, this loan program is brand new. So we're just closing the ones that are coming in, right?
Yeah. It's not even been around a full month yet, I think.
Yeah. So straight out of college, was able to qualify within the income limits for this loan, didn't have a large down payment, but was able to put into this program, and is super happy with everything that the 1 year buy down is just fun to talk about.
Right.
It really is. It really is. And hopefully by the time that year is over, they can then just refinance into a lower rate. I'm hoping we don't have much longer on this rate environment. And by the way that the CPI numbers look today, it looks like we might be in a better place.
I love that. So all the more reason to get ahead of what everybody else is doing. This loan program's amazing. All right, let's talk about the next one. I'm a really big fan of the family opportunity loan that you've talked about before. I don't think a lot of lenders actually remember to ask the questions that are needed to get people qualified for this loan. Give me the scoop on this loan again.
Okay, so this loan is, to be honest with you, I don't think a lot of other lenders do this loan. Because every time I mention it to a client, it like everybody's minds are blown over it.
Okay, awesome.
So, for example, I just had a client that I talked to on Friday. He was coming in. He was already pre-approved for a loan, going to buy an investment property. So I said to him, okay, so on the investment property, who's going to live in the house? Are you actually going to rent this out?
Right.
Or do you have family member living in it? He said, well, my parents are going to live in it. I was like, well, then why are we doing an investment loan? Because investment loans mean higher rates, higher down payment, points on it. Like, there's a lot to going on in investor loans. But if you're putting your parents into the house, you could do what's called a family opportunity loan. This offers them, it's a primary transaction, which means lower rates because it's a primary home. So it's the same rate you'd get if you bought yourself a house, right? The down payment is as low as 5% as compared to an investment property when you're putting 20 to 25% down payment. You don't have to have as high of FICO scores to be able to do it. But remember, it's a conventional loan. So FICO scores determines rates too.
Right.
there's not points on it. Like on an investment property, most of the time you're going to have points on those. You won't have those on this unless you're, not like you would an investment property. And then the rates are clearly lower, like way lower than investment
Wow.
properties.
So a lot, and it's all it took was that you were going to have someone, family or something of that nature in a home, like, or your sister, your brother, your mom, your uncle, your aunt.
It's not every family member. I didn't mean to cut you off. I'm sorry.
Oh, go. It's good. Tell me. Yeah.
It's not every family member. So this is for your parents. So like the guideline on this is we're going to qualify you by yourself. Your parents are not on this loan. So it's not like they're co-signing on it, which some people get that confused. They're not co-signers because that's a totally different loan.
Right.
But you're putting a letter together acknowledging that I'm purchasing this house for my parents that couldn't buy it without me. Right. So it's a letter of explanation that's being put in. We're not providing any income from them. We're qualifying just on your income alone as the person buying it for parents.
Right.
So for me, I've done this personally for my own, like my in-laws.
Right.
And it's the best way to become an investor because you're not having to put the huge investment down on it.
Right.
Plus, you're not having to pay the high interest rates.
Right.
So when the future, like if you're doing it like me, I'm doing it for more long-term purposes. I don't ever plan on selling that house, if I don't have to. So in the future, I mean, heaven forbid anything happen. I don't want to say anything is, but in the future, that house will be a straight investment property, but I didn't have to purchase it like that.
I freaking love it. I love it. And I'm glad you clarified that it is your parents, because I think that some people might, and I even think I used to get it confused thinking you could do it for a college student or for whatever, but it's strictly for parents. But there's a lot of people doing that here in Vegas. Honestly, a lot of people.
Well, and there's different ones too. So this one's just for parents. You can do the similar one for like a disabled child. So if you have a disabled child that wants to live on their own, you can do one for that disabled child too. The difference between a college student, so this program, doesn't have to be miles away from where you're at. It's not looked at like a second home where you have to be 100 miles away from your primary residence. You could have it literally right next door, so you could watch your disabled child or your parents. You could be there to care for them, but they're still living in there. When you can also do this for a college student, but on that one, it has to be used kind of like a second home. It has to be a certain distance away from your primary residence. So it can't be in the same city that you live in right now as the parent. So there's different ways of making this work.
So like, I love that we show one flyer and you just brought up two other loans that were very similar. So
not to go everywhere.
No, I'm like tooting the horn of like, hello, this is so just because we were just showing these loans, please know, guys, there are thousands of scenarios that could work towards you. And Amber is one of the most creative lenders I've ever worked with. She's going to be the one that does exactly that. Okay, it's not your mom, but it's who? Oh, it's your this. Oh, let's hold on. We have this other program.
I love it. And okay, just since you mentioned that too. So I had another client call me one day that said, well, I have my daughter that I was going to, they were literally buying the house right next to him. The daughter that was going to go in the house. And the reason why I wanted it next door is because the daughter had like autism, so we were able to use this because they could put a letter together stating the reasons why.
They needed to be close so they could take care of her, but she wanted to still have autonomy. I love that.
She wanted to be able to have her own freedom, but they needed to be close so that they could still help her out.
I love that. That's amazing. And this is, I want to ask too, a lot of lenders, you have a lot of options when you're a lender, right? When you're a loan officer, to choose which companies you work for, to choose why you go to one company versus the next. And I know that there's, everyone that makes decisions for their career for certain reasons, but is this a lot of why you chose Guild, or what made you choose Guild in terms of going to work with these guys?
There's a lot of reasons why I choose Guild, but Guild has amazing programs. They're always on the cutting edge of everything. Guild has a great name too. The only people Guild will hire are top producers.
Nice.
So when you're looking at the managers,
you are one of the top 200 in the nation on a basis. So I just want to toot that horn for you there. I'm going to put that in your little bio underneath your name from now on. Top 200 lenders in the nation. Yeah, I love it.
I mean, the way that benefits you by like working with Guild is that when you go to write a contract for somebody, most of the time they're going to look at, oh, Guild, I like them. And it's not just me that works at Guild. We have a whole bunch. The Guild is the number one purchase lender in Nevada.
I love that. And it's nationwide, which also helps when it comes to, if you're moving out of the city, it just helps from a crossover perspective.
Yeah. I'm not going to lie though. One of the main reasons why I sign on with Guild too is it's run by women. So there's a
Oh,
good balance between women and men at the top, which the balance is always a beautiful thing.
get it, girl. You know what? We know we love our ladies,
We like our
leaders.
girl power.
Love it. All right, let's talk about the next loan, and I would love for you to give some examples of the type of person who should use this loan, or types of ways it can be used. Is the DSCR non-QM niche loans? There's a bunch of them actually, but can you walk through the product of this? Because this is probably one of my favorite loans we talked about this year, and I don't know that we had as much of a response as some of the others, but I really think this one's so special.
Yeah, and to be honest, like this year, I've closed about 20 of these types of loans.
Okay,
So it's
awesome.
very popular to be able to do these loans if you're looking to become an investor. So non-QM is loans that are, can you still see me, Laci? Oh, my
Yeah,
computer just shut
yeah.
down on me for a second. So they're loans that don't fit with inside the conventional FHA VA box. So it's
Okay,
anything outside of the box. So this is actually a really big range, but we're going to talk about the DSCR program for right now.
okay,
So for example, I have a client that I just barely closed like 2 weeks ago on this program. She didn't have a traditional job, but she just inherited a lot of money. She
okay.
wanted to be able to bring in some income with that money, and she figured out the best way to be able to do that was to start investing in real estate. But she couldn't qualify for a loan because she didn't have any money that she actually brought in. So the
Right,
DSCR loan is strictly for investment properties. We don't verify income on it. We don't verify job on it. The only income verification that's on it is we make sure the house that you're purchasing rents for the same amount as your payment.
awesome.
So
Which
so
in Vegas, with rent being on the highest it's ever been, that's not going to be a hard thing to do, right?
yeah. It's not a hard thing to do. If there's a problem when the rent comes in from the appraiser, then we look at there's options on these ones. So this one, the rent didn't come in as high because sometimes the rents in areas might be based off a year or two ago
Yeah,
because they haven't updated that, like there hasn't been new renters that moved into it, right?
right.
So then there's leeway on this program. You can do it in interest only. You can
Mm,
add a prepayment, like a higher prepayment penalty to it to lower rates and to
oh,
lower your payment to be able to match that rent. So you can play around with it. And that's what we had to do with this particular client to be able to get the down payment that she was looking for, but be able to make the payment work for the loan program. So
I
there's a
love it.
lot of flexibility to it.
Well, and we get a lot of phone calls. I think I did probably 14 or 15 calls just last week alone to people who want to invest in Las Vegas, which makes me so happy because, investing right now seems like it's off the table for a lot of people. With interest rates being higher, you think that people would not be thinking of that. But the reality of the situation is I think a lot of people are realizing, oh, while the rates are a little bit knocked up, or
Mm-hmm.
higher, a lot of these hedge funds and the people that I would have had to compete with before are off the table. So now I can actually go and get something. Yeah, I'm going to pay a little bit more, but I'll refinance it later. But what I love is that it's just people are thinking about real estate as an investment opportunity. We both
Yes,
know, you and I both know, the best investment you're going to ever make in your life is going to be in real estate because people always need a place to live and they're not making any more land. The Lord above,
exactly.
or whoever you believe in, definitely stopped building land a long time ago. They are building homes, they are building properties, but once land is gone, sorry folks, we're out of land. So with me,
Mhm.
I just think it's really interesting to see that many people in the last few weeks. So when I get on the phone with someone who wants to invest, I get so excited about talking to them about these types of loans, the non-QM loans, those special, really. And I don't talk about loans much, but mentioning that they should talk to you about them, it just
Mhm.
really is cool because it gives another layer of opportunity and possibility, whereas most people might have been thinking, so I have to have 20% down. Wrong. So I have to have this, oh, my rate's going to be higher or whatever, right?
It definitely gives a lot of different options out there. One
Love it.
other cool thing about that one that I just thought about while you were talking too is I just had another client that was doing a non-warrantable condo. So
Oh, yeah.
we ended up putting it, I mean, on non-warrantables, there's programs that you could do with income and without income, but it's definitely possible to do it on like condo tells or
Yep.
something that you can't get a regular loan on. So
Yep.
as you were mentioning like condos and stuff, I was like, oh yeah. We did those two on there.
Yep,
So
absolutely. I'm
mhm.
super proud of what you've been able to do. I know there's been quite a few people that we've helped and that you've really helped get over the hump. I know in the last couple of weeks alone, we've had clients that have had last minute things come up on their credit and oops, we didn't know about that.
Yeah.
And just anything that could go wrong has gone wrong. And it's kind of wild, wild west right now in general. And it's just been so nice to see that you never faint in the eyes of issues or problems, and you're always facing all of those head on the behalf of the clients, and don't take no for an answer. So I'm just grateful for
Well,
you.
thank you. Well, you too. Back at you. We make a good team.
We sure do. All right, last one. Let's talk about, ooh, that's the wrong one. Let's talk about, where did it go? Is it this one? Yeah. The one loan to renovate. Now, we just did this one, I think last week or the week before, I think it's 2 weeks ago. This one I really liked because it's an FHA loan. If I'm not, correct me if I'm wrong, FHA loan, but it gives you an opportunity to buy a home that maybe you're not 100% happy with. Maybe you're like, I have to have a house with a pool, Laci. It doesn't matter what you show me, it has to have a pool. And I'm over here going, listen, honey, I'm going to show you guys in a minute because I figured out what was going on. Listen, honey, let me talk to you about how many homes actually have pools in Las Vegas and how much you're reducing your opportunity by just looking for one with a pool. This loan allows you to include the cost of a pool into the home loan and put it in your damn self and get you the pool that you want, right? Or something as minimal as, I just don't like that. I love the house. I hate it. I hate that it has orange paint. Or I love the house, but it needs a new backyard. Or I love the house, but it needs a casita. Or I love the house, but, right? There's always a but. The people who walk away from opportunity because of a but, this actually layers on, and it's okay. You want to renovate, but you aren't going to have the money to do it. You can do that with the loan up front. So I just think it's really cool. Sorry to blow the whole stack, but will you talk to us a little bit more about it and how it works?
No, of course. Yeah. I mean, when you look at like how you just showed the inventory earlier. So if you're going to have to settle on a house, and you're like, okay, but it doesn't have this, this, and this gives you the opportunity to put this, and this, and wrap it into the loan instead of having to overpay for the house that you would have already had all of that. So this is a perfect loan because what it's going to do is you're taking the purchase price of the house. So let's just say the house is like 400,000, right? And it gives you the ability to add on $35,000 to that 400,000. You're going to take $31,000 out of that 35,000 and do whatever you want to fix the house up. So new cabinets, new paint, new carpet, like Laci said, casita, pool, whatever you can fit into that 31,000. This is called an FHA 203K limited. The limited is so that we don't have to get FHA involved, and it makes it a 30-day closing for you. Right. So it gives you the option to do more things to your house. Or if, like I said, if you have to settle on a house, I love this picture in this on the flyer because it just shows like you might walk into it and like that normal kitchen would throw me off when I first walked into it until I saw what I could do. And honestly, that's just paint and some other stuff that are on it. So like it gives you the opportunity to dream a little bit when you walk into a house. And if you are settling for a house, don't settle, make it your own by doing this type of renovation loan with it.
And you don't have to take the full 31 or 35,000 out. You can take 5,000. So I know that something that really comes up for me, even when I go to buy a home, I already know I'm coming out of pocket with all the upfront stuff that you have to do to buy a home, getting moved, all of that stuff costs way more than we ever think it's going to cost, right? So once you get over the hump, you turn the key, we finally moved in. I know as well as you do that if I walk into this home and I know I got to replace the floors, and it's going to eat away at me for the next year while I save the money to replace those floors, it would have made me feel so much better walking in knowing that my payment was maybe adjusted by $10. I'm making up numbers, $10, $12, whatever it is per month. But now I have the ability to borrow that $1,200 or $1,500 extra dollars that I don't have right now to just put in new floors, or $5,000 to just put in new floors. So I just think it's just such a smart way to go about it. And I don't see any lenders doing this. And I don't know why. It's the same FHA rates. Am I right?
It's the same rates. And I mean, okay, so if you look at this in a rational way, you're buying a house, you're going to go in the house and you're going to put in flooring later on because you hate the flooring. You hate the countertops, but you love the location of the house. You love the house. You just hate certain things in it. So in order to do that, you'd probably have to, unless you have the cash laying around, but if you don't, you'd have to charge a credit card to do it. So then you're charging a credit card at 20 something percent interest rate to be able to put that in when you could wrap it into your rate that you have right now, which is much cheaper. Or you're doing a home equity loan of, 11% interest rate when you can just wrap it into the regular rate right now. So it is the cheapest way to be able to do renovations on a house.
I love it. I'm super excited about all these loans. I'm so grateful that we've been able to help so many people in over the last year. If you're watching this and you have questions specifically about the loans, we'd love to help you directly. As you've been seeing across the bottom of the screen, we always have my phone number. That's my number. You can call me right now. That's me. Our phone number at the bottom of the screen. There's also a link in the description in all of our videos, as well as a link in the pinned comment for all videos on YouTube. So don't be shy. Please reach out. I think I've done 8 calls calls today with people, if I'm not mistaken. I think it was 8.
Love
I told
it.
you earlier. I think I have 2 more after this. I'm hoping I'm not going to be late for the next one. But I personally am the one that's going to call you. I can't discuss loans. I can tell you what I know, what we've learned together here. But when we get you to a place where we think you're ready to actually explore either a game plan, timing, or, it's time to talk to Amber, I'm going to pass you over to Amber. She's going to do exactly like I do. She's going to cradle you like a baby, sing in your ear, tell you all the wonderful things about what you can do with the loan market. She won't do that. Her husband will probably kill her. But what she will do is make you feel good and feel positive about where we're going with your loan. So thank you, Amber, for once again walking through all of that.
Thank you for having me. I love it. I love talking about it.
I'm going to show you guys what I was trying to do that before. I got the screen to work now. So I'm going to add this back to the screen. This is June's housing snapshot last month, just to reiterate. So last month, 440 was the median price. That's the sold median price. We're only at less than 2 months availability, guys. A comfortable place for us to be would be like 4 to 6 months. So we're less than half of what we really need to be for this to be a cool equalized market. But let me show you, let me do some scenarios here with you guys, because I just like doing this stuff. And then we're going to answer your questions. So please drop your comments like it's hot in the comment box below. We will definitely be answering those questions in a minute. I'm going to run over to show you. This is what we look at as realtors every day, all day, every day. So when we need to get access to look, can you guys see it, Amber? I don't know if you can see it or not.
I can see it. Yeah.
Okay, so this is what we do. So let's say you guys want me to, oops, what happened? There we go. Let's say you guys go, hey, Laci, I only want to stay under the median home price, and I want a single family home. I'm going to go over here and I'm going to say, I want to look at active and coming soon listings. I want to look at anything under the 440 price point, because that's the median price point, right? Down here below, there's 2,200 homes in all of Las Vegas, single family homes. And this actually includes condos and single family homes. Let me take those out. Now it's 1,182 single family homes in all of Las Vegas that meet that median home price of 440. Now I'm going to go to the map and show you where those are located, because I think this is a really important thing for all of us to get used to looking at. Sorry, I got to zoom out. All right. So for those of you who say, I only want to live in Henderson and Summerlin, congratulations, cool beans. Here's the reality of the situation. Henderson, I'm going to zoom in so you guys can see this.
That's really cool.
Yeah, this is awesome. I love doing this. I'm so happy I was able to figure it out. So yeah. Henderson is like this area here. I'm going to zoom in a little bit more. It always jumps down into the Henderson basically starts at this freeway a little bit more in. It actually starts about here, goes up and around and goes, this is Henderson. It's like, right. I'm going to do a little outline for you so you guys can see Henderson. A lot of you guys are like, I only want this. I only want that. Okay. Let me show you what that's going to get you. Okay. So I think this is all considered Henderson. This is a little bit of a rough outline, so don't judge me. I'm definitely being a little rough with this. In all of Henderson, there are, let's see, 124 pages. Sorry, 124, one of 24. Yeah, 124 total listings. 124.
Dang, that's not that many.
Now, let's look at the results of these. Let's look at the age of the homes. A lot of you guys want brand new homes, right? Love that. Love that you want a brand new home. In the 124 homes that are available under 440, the median home price in Henderson, again, that was a rough outline, so I'm using very rough numbers here. You've got days on the market right here, shows you how many days these homes have been listed and sitting. The oldest home is 1942. The newest home is 2023, which is awesome. Newest home's been on the market 38 days. Oldest home has been on the market 46 days. If I scroll down, there's some homes like, let's look at this one, 1,242 days it's been listed on the market. What's this bad boy look like? Let's look at these photos. Okay, there's one photo to look at. I wonder why it's not selling.
Oh, because the inside doesn't look so good.
I wonder why it's not selling. Let's go to the middle. I'm just going to go to like page 3, right down the middle. We've got,
I like how you're just picking random ones too.
Random, right? Oh wait, no. Here's the other thing. Let me zone by pool. Let's look at how many of these under 440,000 homes, under the 440 median home price. Let's see how many of them have pools. This column right here. No. Let me flip it. Okay, there's 3 homes, my friends, out of the 440 and below that are in the Henderson area that have a pool. This one's just hit the market today. It was built in 1983. Let's look. Okay, this one is located. Let me just tell you where it's located real quick. Let me look at the map. It's located, I think, it's off College Drive. So it is the farthest end of Henderson you're going to get. This is the strip right here. This is about a 35 minute drive from the strip, which isn't a bad deal. It's all freeway, really cool. Let's look at the photos of this home. Okay. Not
I love how
updated.
you're doing this live. Oh yeah.
Thank you. Not updated, but that's okay. It's probably got good bones. Not
Renovation loan all day long, right?
renovation loan, that would work here. They clearly are, have some wires. This pool. Oh, so this is the pool.
Oh, the pool's a problem.
Okay, so it's empty and probably not in good working,
It looks
fashion.
like a cool pool, but it would take a lot
Looks
of
like a dope
money.
pool, right? Looks like a really cool pool. But here's the
Yeah.
problem, guys. You're gonna have to put some money into that home. So if you're desperate for a home with a pool, you're desperate for this, that, and the other, that loan that we just talked about might be for you. But I just want to, it's reality check for everybody. Let's look at some other homes here, because all of you guys got to have a pool, got to have single stories, got to be in the best school zone. It's got to be under 400,000. Let's get real here. Here's Bradford Summit. This is a good one. Is that the one I just had open?
No, you had the first one open, the one that was on the market one
All
day.
right, Bradford Summit, 439.9. Awesome. This has a tenant, which makes it a little bit difficult. So that might be why they haven't been able to sell it. It's a great area. I think I know exactly where this is. Let me look at the zip code. 89183. I'll show you guys on the map so you can see where it's located. Silverado Ranch and Bermuda, right in the heart of like Green Valley, Henderson area, right where, there's like probably 300 restaurants in a 2-mile radius right there. Awesome neighborhood. No offers. Okay. Can't show you the back end, but I can show you the front side. Pool looks like it's in great shape. I better get some phone calls about this house if you guys are interested.
Yeah, that house looks kind of good.
This is a Richmond American, I believe, if I'm not mistaken. I remember seeing these built. They've got the driver, they have the parking garage on the left side of the house, kind of back a little bit further from the entrance. These are really cute little starter homes. Not super updated on the inside, but a cute layout. I know my ex-brother-in-law had this exact layout, so I know this layout very well. Hard to tell if it's got a lot of good space because of the way they have it furnished, but hey, they're trying to sell their home. It's all good. Probably going to need new flooring, maybe new paint. Can't quite tell. Maybe new cabinets, but it's got a pool, right? It's got this cute little loft overlook. It is, what is this? 1,500 square feet, 1,529 square feet. So out of 124 homes in the general vicinity of Henderson, there's 3 that have a pool. One of them is a broken down pool that probably isn't going to work until you put some money into it. Another one looks like it's a good pool, much smaller home, but a great area, but it's listed pretty high. It's been on the market 56 days though, because they have a tenant in place. And then this last one I'm going to show you guys, I'm just going to go straight to let me look at the map first. Sorry, I always do that. This one is going to be located same place that I just mentioned, right in the heart of Silverado Ranch, the heart of Green Valley. We're going to go over here. We're going to look at this one. Super cute home on the outside. I know this exact layout. Adorable neighborhood. Let's see what the inside looks like. Backyard looks good. Pool looks pretty good. Looks like it's probably going to need new plaster pretty soon. Definitely going to need new plaster pretty soon. So that can be a pricey endeavor. But hey, if you get that loan we just talked about, Amber, you can put that money right towards it. It's got nice floors, nice big oversized marble or marble look tile. Maybe not the most modern look, but hey, no biggie. You guys could always get that FHA loan and update it. But this could be a great home for somebody. Let's get to the kitchen. Kitchen's definitely could use a little work. It's not bad though. It's in good shape, right? So I'm just trying to give you guys a real understanding of like what's going on in the market. If the 440 is the median home price, that means that's where most people are shopping. If everybody's looking for a pool, there's not very many to be had if they're in that Henderson area per se, right? So I just wanted to kind of give you guys a take on that so that you could sort of see what's doing. But really, out of all of Las Vegas, the bulk of the homes that you're seeing available in that, what was it, 1,181 homes right now that are available as of today, under did I say under 440? Yes, under 440.
Under 440.
Is the Northwest and North Las Vegas. Can I just tell you right now, this is an area that most people overlook, look away from, don't understand, and you're missing out. You know why? Because it says North Las Vegas, and a lot of people have a bad taste in their mouth because North Las Vegas consists of also including like Fremont Street, where there's, higher crime and things like that. But you guys, this area over here, up here, especially by Providence and Tule Springs, Kyle Canyon, amazing homes, brand new, gorgeous, unbelievable homes. Right here, Los Prados area is amazing. Right here in the Northridge area and over by, what's it called? Tule Springs. You guys, you're missing out. So I'm just really trying to bring it forth to you guys to help you understand what the heck's going on when it comes to, our market, what the heck's going on when it comes to our inventory, why 440 is the median home price, and why you're not going to get a brand new pool or a brand new this or brand new that, and why working with someone like Amber who can be creative with your loan and help you understand what's possible, how we can pull it together, and how you can get the best of all worlds makes the most sense. And the only way to do that is to work with our team. I feel like I went on a soapbox rant, but I had to show you guys some stuff.
I love the visuals.
So I had to show it to you guys. We'll do more of those live active searches for you as we do more of these live streams. But I found out about this new thing and I had to use it. So it's like a kid with a new toy.
And you just barely figured it out too. So that was awesome.
It's working. Let's try it.
I always wished I had access to the, I mean, it's almost, I always wish I had access to MLS just to see what's going on. So thank you. I was like totally into it. I'm like sitting like this the whole time.
Thank you so much. All right, I'm gonna hop over to the questions. I know we've kept you guys on for a little while longer than we wanted to, but I really thought it was important to give you guys an really breakdown of the market, understanding of all these badass loans that Amber's bringing to the table through Guild Mortgage. Thankfully, thank you, Amber. And then beyond that, to see what kind of loans and how that could be applied to your situation. Beyond that, I also thought it was super important to let you guys know of the reality of the situation in the market right now. There are homes to be bought. You need an educated real estate team like me and my team to help you understand the lay of the land, the city. Look at how I assess those homes. Boom, it's going to need this. I'm not even standing in those homes, and I guarantee that I touched on 9 out of the 10 things, right?
And it was your first time looking at them too.
First time looking at, I didn't look at those before now. And then you've got an educated, well-respected, top 200 in the nation lender who's going to fight like a dog with a bone, tooth and nail, to make sure that you get the best version of whatever you need to do. All of that being said, we're here for you. We want to serve you. We want to make sure that we're the people you call when you're thinking about moving, not when you're coming in town next week, not because you are here and you're on vacation, you want to buy a house. No, I mean, we do want to talk to you then, but we really want to talk to you in the beginning of your experience so that you are secure and safe throughout the process, working with people who care about you. I'm off my soapbox now. Let's go to
that was a good soapbox.
All right, David Newhouse, Laci, you're a babe, smoking hot. David, hello. Thank you. Oh God. He said, I have a question. Can I take you on a date and be the stepfather of your children? Okay. This is getting out of hand, guys. David, this is a very sweet compliment. My children are both out of the house as of 2 weeks from now. Son's going away to college, so I don't need a stepfather. A date would be nice, though. We'll see. We'll go from there. Matt G says, hi, ladies. Great live stream last week, breaking down conventional loans and payments based on various housing price points. Amber, I agree with that. Thank you, Matt, for watching what we're up to. How did you feel about that? Did you get any feedback on our previous live stream?
Yeah, I mean, we did get some feedback. It was really good feedback. So let us know if you want us to break down some more things, like what you're looking for,
We're lifting the veil, my friends. We're lifting the veil. We're letting you see what we see. No more smoke and mirrors, no gatekeeping. We're just trying to be as real as we can get. Thank you, Matt G. We really appreciate you. Sammy Bowen is here. Hey, baby girl. How you doing? Hey, so good to see you. Living in Omaha, David Matney says, spot on. He likes what we're talking about. Spot on. Lockup says, mahalo. Wait, I got to get it in the camera. Mahalo. Hey guys, I'm actually moving to Las Vegas from 4G Spider-Man August 1st to establish residency and my job there. I did an inquiry with your link about inquiring for a realtor. Awesome. If you sent that link today, I'll definitely be following up with you. If you didn't get a call back from us, that's strange, but please text the number that's on the bottom of the screen and we'd be happy to serve you. I don't know if we missed you or what, but I've responded to everyone that I've got pending as of like 8 o'clock this morning. So let us know. What is the maximum purchase price for what? He's asking. I'm wondering if it was for one of those loans. Can you run through the max purchase price for some of those loans that we were talking about?
Well, okay, so if you're looking at an FHA loan, which that's the 203K loan, that's the one that you could do them on. It's $492 and change.
Right.
On that one. Conventional loans are $726 and change.
Yep.
The non-QM loans, there's a wide range on those ones.
Okay.
Depending on what you're going to do, there's a wide range.
I love that you just pulled that off with no problem. What about the FHA, the one that you can add the money to the FHA?
That's the $492 and change. You still have to stay at the FHA loan limits.
Awesome. Got another question here from Dave 2035. Dave J. I'm in a full-time job, but it's a temporary job. Can I get pre-qualified?
So if it's full, okay, so it depends on how long you've been on a temporary job. So we might have to talk about that. But when FHA is looking at full-time employment, what they're going to be looking at is to make sure that your hours are consistent based on your year-to-date income that shows on your pay stubs. So if that shows that your hours are consistent, we should be able to use that income. It depends on how the temporary job works. Like
it depends on how it's set up,
different versions of temporary jobs.
Yeah.
And how long you've had it, how long you've been employed in the industry. Like there's a lot of different ways. So I think that's one that let's talk together and figure out how to get you there.
Okay. So again, our phone number is on the bottom. If you want to scrolling across the bottom, there's also a link in the description and a link in the pinned comment. We're here for you. That's a little bit more of a dig deep kind of question, but we're here to dig deep. There's no pressure. We're not going to run your credit if you call us. It's all good. So let's talk about it. John Harris says, is there a special loan for senior citizens or those with disabilities? Good question, John.
That is a great question. So remember when you're talking about loan programs, a loan program can't discriminate for age, disability, anything. So
Right.
they've got to be able to give the same programs to everybody.
Right.
Right. So what you're going to be looking at, but let's say when you're on disability and Social Security, and let's say that you don't have to pay any taxes because it's all non-taxable income, we can add 25% to that income to help you qualify for more because you're not paying taxes. So there are some little tricks in there, but we can't discriminate by holding you out of a loan or giving a different type of loan than anybody else because of those items.
Awesome. Awesome. Good answer. What would a FICO score need to be in order to get the best rate, Amber?
So when you're looking at an FHA loan, 620 or above is the same interest rate. They don't really have like different rates depending on FICO score. When you're looking at conventional loans, it's going to be 740 and above. Actually, conventional adds all those LLPAs. So there's also depends on down payment, all kinds of different things. But typically, you'd be looking at 740 and above, depending on what loan to value you're going to. They just made that question harder with conventional in the last couple months.
Yeah, for sure. But just to reiterate, rates are something you can always, renegotiate later as you do refinancing and things like that. So don't let trying to get the best rate hold you back. I think the better thing to do is come and talk to us. Let us get you the best program that's going to work for you, and you can refinance later as your credit gets better and things like that that come into play. Would you agree?
I would absolutely agree.
Awesome. Mark Gray says, good evenings. John Harris says, yes. I don't know what that means, but John Harris says, wow, so you can get a special grant for a loan or disabled person or senior citizens, ? That's a good one.
You can get grants as a disabled or a senior citizen. Like I said, they can't discriminate for anything. So you can absolutely get grants. There's just not specific grants depending on age or disability. Like you can get, we can look at all the different grants that you qualify for based off of your file. Does that make sense?
Yeah. Okay. Jake Gallen says, congrats on 16K subs. That's right. I hit 16,000 today, actually yesterday, but thank you. Thanks, Jake. We appreciate you always tuning in. John says, wait a minute. What is a no doc business loan? Can you help us with that, Amber?
So you're probably talking, I'm assuming you're talking about the DSCR loan that we just talked about?
Right here. Yep.
Okay. So so the no doc, so on these types of loans, you're not providing any income paperwork. So there's no tax returns, there's no W-2s, there's no pay stubs. The only income that's going to be looked at on those files is how much the house that you're purchasing can rent for. That's the only income on the DSCR type of loan.
I love that. Okay, let me put that away. Let's see. Hello from Pittsburgh. Hello, Pollux. Good to see you as always. John Harris says, nice. Are there any areas, Kai Woman says, are there any areas where the homes aren't so close together? Really great question, actually. Amber, I'm going to ask you, because you grew up in Las Vegas. Where do you think those areas are?
Well, I mean, East Side, Central Vegas, Spring Valley, Lone Mountain area.
Yep.
Did I miss any? I mean,
no, I'm going to put you to work as a realtor if you don't watch out. Looking good. Looking good. Yep, absolutely. Northwest side of town is really a great area. Remember where I showed you that 400 of the 1,100 of available homes for sale is in that area. That area and north is going to be your most spread out kind of experience. It is kind of hit and miss though throughout the middle of the town, like Spring Valley. And then on the east side, there's a lot of land as well. Another place that's got a lot of land is that old Henderson, that first property that I looked at that was down in the corner over by College Drive, a lot of space over there. So one more thing I would say, Kai Woman, is if you're really interested in wanting to know, call us, text us, email us, fill out the form. We'd be happy to help you for sure. SW says, I just booked our trip to Vegas from New York, Binghamton in August. Can't wait to look at some houses. Had such an awesome call with both you and Amber. You ladies rock. Thank you so much. That's awesome. Super, super excited to meet you in person finally. Let's see what else. Oh, here we go. Hey, Tish says, hey, beautiful ladies, great information. I really appreciate it. Thank you, Tish. John says, what's the max for grants that you can get for a house? What's the max amount of grants that you can apply to a loan? That's actually a really good question.
Some of the grants right now go over 500,000. So there's different grants. There's grants for rural areas. There's grants for like that you could use in Nevada. There's grants that are based on income.
Yep.
Well, most of them are based on income, but the income differs.
Right.
So, but some of the grants right now are going above 500,000,
I love
to qualify, depending on, we just have to be able to see which one you can fit into.
I love that. That's a great question, John. Thank you so much for that. Kai Woman says, thank you. You're welcome. Oh, and L619 Jr. says, hi from San Diego. Hello, hello. I know I try to make sure we say hi to everybody who's just giving us greetings and love and hitting on us, or me. On top of questions, I want to make sure you're all seen and you know how much we appreciate you tuning in. We love doing these live streams. High five, Amber. Give me like a virtual high five. Boom, boom, boom.
Where's my thing at? Woo!
We are so excited to be doing these. Again, tune in with us next week. We're going to be here once again on a Wednesday. We try to find the best time throughout that day, Wednesday, when we can give you the most information. I'm going to try to be doing some live streams over on Instagram. So if you're not following me, go to @LasVegasGal on Instagram. I'm going to be doing some fun stuff over there. Other than that, though, we're going to be, continuing to put out new videos each week, Amber's channel as well as mine, just trying to help educate you guys on what's going on in the market and keep you stoked and excited about moving to Las Vegas. So Amber, thank you for being one of the top 200 lenders in the nation. We certainly appreciate it.
Thank you.
Thank you for being creative and loving and bringing hope to our beautiful community of people who are future buyers, future residents of Las Vegas, or even people who already live here who want to buy a home. It's really, really awesome.
Thank you for bringing so much light to our beautiful town of Las Vegas. I think that you're the reason why we had such a population increase in the last 3 to 4 years.
My fault. It's my fault that we have traffic now.
It's your fault that traffic is a little bit more congested. We're going to blame that on you, Laci.
I mean, if it's my fault, shouldn't I get some? I mean, there's got to be like a perk to it being my fault. Shouldn't I get like a driver or something, someone who just drives me?
Yeah, I think we need to work on that. We need to make sure that the credit is given to the right person there.
Yeah, credit, not blame. Although sometimes I feel like it's blame because it is definitely getting busier in this city. But I love it. I love all the energy. Everything good comes with it. So thank you guys for tuning in. We will talk to you next time. We're so grateful that you're here. We'll see you next week. Bye, Amber.
Bye.